What's going on, Tech and Flow family? In today's video, I'm going to talk a little bit about life insurance. Now, life insurance is one of those items that seems a little boring, seems a little weird, but I think a lot of that is because there's miseducation. There are effectively two primary types of life insurances. Number one, there's term insurance, and number two, there's permanent insurance. The key difference between these two has to do with an expiration date, meaning when you purchase this insurance, the primary function of it is there's a death benefit, meaning upon your passing, somebody is getting paid, and when they get paid, they're getting paid tax-free, which is a tremendous advantage. Term insurance, this payment lasts for a certain period of time, 10 years, 20 years, 30 years, till age 80, whatever the contract states. Permanent, there's no end. You could be 120 years old and that coverage is still enforced until it reaches its maturity date, which that's okay. At that point in time, you won, the insurance company's gonna hand you a check. Now, once you get past, okay, let's make sure we have the right amount of death benefit, then you can think about, what your other financial scenarios look like from, do you have other investment tools? Do you have other insurances like long-term care or disability insurance? Are you looking to do really creative things like, put some insurance on a family member, a son or a daughter, or a grandchild or a spouse? And that's when it can really go all kinds of different directions. The biggest thought that I have is I would imagine in America where if every single person had at least 250,000 of total coverage, think about how many families would change, right? We don't know our last days on this earth. That's just a fact. And it could be any day. Term insurance, permanent insurance, life insurance as a whole is one of the simplest forms of leverage. You pay a premium that is a fraction of the total death benefit. Obviously, if you pay that premium for many, many years, then that premium adds up. But even when that premium adds up, it's still usually a fraction of the death benefit. And in return, on your passing, somebody gets handed a check tax-free. How else can you create tax-free income? So, if you don't own insurance, number one, I'd suggest that you buy some. If you do own insurance and you're not sure how it works, how it functions, you feel like maybe it could do more, you want to build some more cash, you want to grow your money, you want to protect a long-term care or critical illness type need, there's all these ancillary ways that you can use life insurance. Then schedule time with myself or one of our advisor partners on our team, and we'd be glad to help. See ya.